Welcome back to the stream. In today's show, I'm going to be talking about two altcoins that just a couple months ago were extremely hyped and almost tripled in price. But since then, they have come back down and I haven't heard much being spoken about them. But a lot has been happening behind the scenes, and they are two altcoins I am looking at accumulating. And I want to talk about them in today's show and why this narrative can be extremely big. But over the past couple weeks, in fact, over the past couple months, we've seen this trend, and we've seen the trend that we don't need to wait for Bitcoin to move to make money in this bear market. I mean, just look at some of the examples recently. We've had GNS absolutely exploding. By the way, if you've been watching the show for a while, you'll know I'm a big fan of GNS, and I think that's almost 2 or 3x since we first started talking about it. That's been a great play. GMX, that's had an amazing run as well. It has come back down, but that's been one that's also run. We've had Quant that's run, Hedgic that's run. The meme coins have started popping off left, right, and center. We had Loon C that did those crazy multiples. I know we made a 3x on the show from Loon C a few weeks ago. And then also we've had Matic, more than 3x from its bottom. And there's been some other small caps as well, which are absolutely exploding. But what this tends to tell me is that, if Bitcoin moves 1%, just imagine what's going to happen to some of these altcoins. I mean, every time Bitcoin moves, the altcoins tend to move. So even if Bitcoin is stagnant in this market and does move sideways, that doesn't mean we can't make money. In fact, making money right now is actually quite fun in crypto because there are so many opportunities and there are so many altcoins that are popping because it's a very narrative-driven market at the moment. And I wasn't necessarily around for 2017. I did get into the market in 2019, so I experienced some bear market, but I didn't experience those crazy losses in 2017 and 2018. But I can't imagine that 2018 period would be anything like now, because then it seems like you couldn't really do much with the crypto. It seemed quite boring. Now, I mean, we've got not only altcoins exploding, but real utility and real ways to make money and narratives flowing left, right, and center and real adoption happening. I don't know. It just feels like such a different bear market. And that is pretty exciting because we're entering this next phase in crypto. So although the prices might be spelling bear market, the activity on the market certainly isn't saying that at all. And that was proven yesterday when I did this tweet on the PerpDex narrative. I won't get too much into this narrative today. It's definitely for another day. But basically talking about how perpetual dexes like GNS, GMX, they're very popular, but MBX, which has a much smaller market cap, is generating the same amount of fees as GNS and is significantly undervalued relative to GNS compared to its market cap to fee ratio. So I did this tweet, and then afterwards, like just a day later, the price had skyrocketed. I think it's come down a little bit to 383 now, but I think I tweeted it like 290. It went all the way up to like 420, and then it came back down just a little bit again to 380. So this is another example of a coin that's doing massive multiples on the back of a hot narrative. So all we need to do in this market right now to make money is stay diligent, keep researching small caps, look for the projects with strong future narratives, strong teams, and allocate accordingly and be very diligent with our risk management. And if we could tick off those 3 boxes, then I think it's still possible to make money in this market. So in today's video, I want to be showing you a narrative that I think is one that has died down a little bit, but certainly could perform within the next few months or so. Honestly, this is one I'd be willing to hold long term. If you want to trade it, it does increase your risk a little bit. So, I mean, that's completely up to you. I'm not a financial advisor, but yeah, let's get into what that narrative is. Just before we do that, remember, I do keep you guys updated on what I'm doing, obviously on my Twitter, but also I've started posting short form content on my TikTok. I did this video, I got 14,000 views. It was a crypto portfolio video. It was quite controversial because I said I'd prefer to hold near protocol than ADA. That is something that I'm willing to fight you on because I truly believe in that. But I'm also posting, short form airdrop tutorials. I did a layer 0 tutorial. I did a DeFi llama hunting airdrops tutorial. So yeah, if you're interested in short form content, first link in the description for my social medias is the TikTok. Give me a follow and check it out because, yeah, I'm keeping you guys updated there when I'm not doing YouTube streams. So what I want to talk about today is the ETH ecosystem and the narrative surrounding liquid staking and ETH staking. So to understand where this stems from, I think the first thing we need to do is look at the ETH Bitcoin chart. So I've highlighted this chart on the daily, and you could see that ETH to Bitcoin has been relatively stagnant. It's been moving sideways and it hasn't shown much volatility. In fact, it's basically been operating like a stable coin, flicking between 0.6 and 0.75. It's been pretty range bound to this range. But we know how significant this chart is because ETH tends to lead the altcoins. And what we got the other day was a little bit of a pump from the bottom of this range up until this key resistance point. Now, if ETH somehow broke this resistance point and did make a push up towards the 0.11 range, that would be a very strong indicator to me that that some of the ETH related altcoins and also some of the altcoins that are correlated to Ethereum could potentially start to run. So this is a very, very, very key zone on my chart right now that I'm looking at, and it's this level here. It's this 0.768 level. Now, if we get a successful breakout, and what that means is a breakout and a retest on the daily chart on a significant time frame, and obviously that would need to coincide with a few other factors like the DXY, Bitcoin, etc. If we can get a confirmed breakout here, and ETH does make a push to the upside relative to Bitcoin, then I do think there is a chance that some of these ETH-related altcoins can perform quite well. And it's quite interesting to me because what happened was obviously ETH exploded during the merge, and there was all this ETH hype, and the coins like Lido and ETH Classic and all these projects were just exploding. But what's happened since is a lot of them have now come down 50, 60, 70% off what they were hitting pre-merge, because that merge hype was so crazy. I mean, it was so violent, the moves we were getting from these ETH protocols. I think there is now a genuine opportunity for us to revisit some of these Ethereum related protocols and have a look at what's happened since the merge and revisit them now that the hype's cooled down. Because obviously, you're not going to buy Lido when ETH's pumping to 2,000 pre-merge, because that's just increasing your risk a little bit. The time to buy Lido was a few weeks early when we first started, or a month early when we first started prepping for the merge. So now that the prices have cooled down on a lot of these ETH protocols, it gives us a chance to revisit them for our long-term bags as well. So the first thing to note is what's happened with ETH staking. So ETH staking has had a huge positive impact due to the merge. So staking rewards right now are a lot higher than we thought they'd be. They're actually 5.8% normalized in terms of net income to stakers, which is higher than some of the projections we saw of 3 to 4%. I do think this increases slightly over the next few months. However, it is still higher than we thought pre-merge, which is a good sign for ETH stakers, because you're now getting an adjusted PE equivalent ratio of 17.2%. Just to put that into perspective, the amount you'd earn prior to ETH based on staking statistics was at a 739x multiple pre-merge. So not only has the merge had a huge impact on ETH issuance, which is one of the main reasons why ETH is now heading towards becoming deflationary or almost deflationary, we have also seen a huge shift in earnings. So actually staking ETH now is a lot more profitable based on ETH's market cap. So the merge had some huge impacts on the space, and it just makes me question. I mean, I'm pretty bullish on ETH long term as an ecosystem. I certainly think if there is one ecosystem that rules them all, it may not be ETH in and of itself, but it definitely will be ETH and ETH related protocols. Let's say like the L2s that are powering ETH. The general ecosystem just so strong, so much development. I definitely see Ethereum as being that dominant chain still. My theory hasn't shifted on that. I also believe in a multi-chain future, because I believe that we'll have other ecosystems that certainly find their niches and find their communities and have a part to play in an interoperable multi-chain future. But Ethereum's certainly going to be one of those. And with thousands of projects launching in the middle of a bull run, of course we're in the bear now, but you got to remember what happened in the bull. Thousands of new projects launched, and with millions of new users flooding into the space. I mean, what chain do you think they're going to go to first? They're going to go to the main chains. They're going to go to the most reputable chain, and Ethereum really has that brand identity. And I think if it can execute on its upgrades, then it can capture some of the millions of users that are set to flood into the space next bull run. Now, if ETH's deflationary now, imagine what will happen during a bull run with thousands of new projects and millions of new users. I mean, it would be kind of crazy. We just definitely have to keep our eyes on Ethereum, and it's why I continue to accumulate Ethereum, because I like it as an asset. But I think the liquid staking play is maybe a slightly underrated play by the market, because when the merge was going on, I saw so much hype for Lido. I saw so much hype for ETH liquid staking. I saw so much hype for ETH proof of work. Since then, it's kind of died down a little bit. So now we genuinely have an opportunity to reconsider tokens like Lido and Rocket Pool and have a look at what is developing behind the scenes, behind the curtain under this narrative. So right now, you can stake Ethereum on Lido for 5.5% APR. If you guys don't know what Lido Finance does, is it removes the need for you to stake directly with a validator. So if you have one Ethereum, you can put it into Lido. They're going to give you staked ETH as a receipt, which is a tradable asset for you to earn yield on, trade. So it's a capital efficiency play because you're not locking up your tokens. You have that token that you can still trade, and you can earn yield on your Ethereum without having to lock it up. And that is essentially what liquid staking does. Now, demand for liquid staking has been increasing because users like the fact that you get that increased capital efficiency for not having to lock up your yield. And if we kind of just zoom out a little bit and take the big picture of Ethereum into account, as more users use Ethereum, as more people acquire Ethereum as an asset and hold Ethereum as an asset, they're going to need places to stake it. Like, if you own Ethereum, it makes sense to stake it if you can do so in a safe and secure way. And validator staking is one way to do that. So in my opinion, if you do want to accrue value from the Ethereum network long term, obviously holding Ethereum is one way to do that. But people are going to need to stake their Ethereum. And one of the major beneficiaries of that trend is going to be protocols like Lido Finance, which are the major liquid staking platforms. I mean, Lido already has $7 billion staked. And if we look at some of the analytics recently, the Lido ETH APR actually reached 6.2%. Unique depositors is now at 100K. This is very interesting. The staked ETH is now almost at 1-to-1. And you remember there was an arbitrage here. It was like 96 cents at one point. This shows the market is now gaining confidence in staked Ethereum. So the market was losing confidence. We can see due to staked Ethereum coming close to parity now, the market is regaining confidence in Ethereum. There's close to a 10K ETH MEV rewards restaked by Lido node operators now. And Aave, this is also very interesting, they are now launching their new staked Ethereum earn strategy through Oasis. So there's a lot going on. Now, Lido's TVL currently sits at 6.26 billion. It was sitting at 18 billion pre UST during that period, but it actually has been pretty steady because, as I said, people still need places to stake ETH, irrespective of market conditions. And we can see that there are deposits across a variety of networks, but the majority of the capital deployed into Lido is still on Ethereum. So Lido, in my opinion, from a fundamental perspective, is tracking well if we look at the stats. So the stats are available on that June dashboard if you want to have a further look at them. But if we look at the price since pre-merge is currently down almost 50%. Now, from this little bottom zone that we got a bounce from, we're up 40%. So Lido's kind of been hovering in this zone here. It has come down pre-merge. We've had a cool off. It found its local bottom, and then it started to have a little bit of a bounce, which coincided with the Ethereum bounce. So there's many, many, many opportunities off the back of Lido. There's opportunities on Instadapp, which is a way that you can earn 10 to 20% on your ETH via staking your ETH into Lido and then coming into Instadapp and putting staked ETH and ETH together. Staked ETH is the receipt that you get for staking Ethereum. So what you do is you'd stake Ethereum, you'd get staked ETH, you'd deposit that into Aave, you'd leverage it 2.3%. 2 to 3x, earn 10% APR and lay back and relax. Now, anytime you include leverage, you are increasing your risk because if Ethereum dropped by 50%, there's a chance you'll get liquidated, or margin called. So you do have to be careful when executing strategies like this. But the reason I highlight this strategy, because I'm not saying you should do it, I'm highlighting it because it shows the use case that Lido is providing and the use case that other liquid staking platforms for Ethereum are providing. Because if you're just staking with a validator, you're losing capital efficiency of being able to swap, leverage, borrow the asset. Now you can actually do that because you have this staked ETH token. So strategies like this are now possible due to liquid staking. And I think in the future, this does appeal to a lot of people, especially as Ethereum starts to consolidate in price. Yeah, it may come back down. I'm not a fortune teller, but as the market gets less volatile and we kind of start to find that rhythm, I think people will be a lot more confident in terms of putting an asset like ETH up as collateral and then leveraging against it, because when the market is volatile, that does make it a little bit more tricky to execute strategies like that. So Lido Finance to this date is still the largest staking provider with a 30% share. But there's also another token in this niche that has grown a significant market share, and that is Rocket Pool. So Rocket Pool actually grew at 31% and is one of the fastest known entities to grow in this niche. Now, in absolute terms, Rocket Pool outgrew all known entities except Lido and Coinbase. So Rocket Pool, which is another staking platform, is also very popular, but it is a little bit different to Lido Finance. Now, I do believe Lido Finance, by the way, is a good hold. In fact, long term, Lido is one that I do want to hold. I also think potentially if ETH does break this key Bitcoin level that I showed you, the ETH BTC chart, and we do see a run in Ethereum or the Ethereum alts, then Lido and Rocket Pool and some of these other alts, they will be beneficiaries because they are interlinked with the Ethereum ecosystem and they also capture upside. But it really depends on what kind of investor you are. Because personally, I'm willing to just DCA and stack Lido long term because I know that over time, as more people need to stake Ethereum, they're going to need somewhere to stake it. And Lido is now the top place to do that. But I also think there's a great opportunity in Rocket Pool because Rocket Pool is offering a very attractive risk reward relative to Lido. And let me explain how it works first before I can get into that thesis fully. So essentially, I'm going to paraphrase the Bankless HQ article here because they did a great Medium or newsletter article on this topic. You don't need to spend thousands of dollars on hardware and energy costs. All you need is a laptop and ETH if you want to get involved in securing the Ethereum network through validator staking. So while liquid staking protocols offer a more accessible solution, i.e. Lido Finance, for those that don't meet the 32 ETH threshold, which is what you needed if you wanted to stake Ethereum to a validator, 32 ETH, I mean, that's over $40,000. It's quite a lot of money, $50,000 to run your own validator. There are ways to do this without that amount. So if you want to run your own validator, going to cost you 32 ETH, $50,000. If you want to still secure the Ethereum network, but you don't want to liquid stake, because not everyone does. Some people like validator staking, and I think it's a valid strategy, and I'll tell you why. You have three options: plug and play solutions, solo staking, and thirdly, which is the one that appeals to me in terms of something that's actionable for us, Rocket Pool operators. So if we scroll down here, it gives us more information on Rocket Pool's doing. So essentially, Rocket Pool is a decentralized Ethereum staking protocol. Notably, it has a 0.01 ETH staking minimum. So that barrier to entry of 32 ETH with the validator node staking, that is now diminished to 0.01 ETH. Rocket Pool lets anyone stake essentially any amount of ETH by trading whatever sum of ETH they want for RETH or Rocket Pool ETH, the tokenized staking derivative of the project that provides passive income via staking rewards over time. These are Rocket Pool node operators who run what are called as mini pools. Rocket Pool mini pool operators are doing all the same things that solo stakers are, but they can do this with less ether and potentially higher rewards. So you can start a mini pool to stake your own ETH. So if you're holding Ethereum, you can start a mini pool, you can earn ETH rewards, you can do so with as little as 0.01 ETH. It's a great solution. It's a great solution relative to liquid staking if that's something that you want to do. But there is also a token called Rocket Pool, which captures upside because it pays out. I'm trying to get the exact amount it's paid out. Yeah. Where's it? Where are the fee payouts? I had a great amount of fees that it was paying out. But yeah, it basically pays. Oh, here we go. It basically pays out fees based on the amount of people using the protocol. So the more people that decide to stake Ethereum through Rocket Pool, the more the RPL token accrues value because they do pay out a percentage of that revenue to holders. They're also fully diluted, which I like about the protocol. Makes me a little bit less scared than other projects that just love to dump their Rocket Pool. So in my opinion, Rocket Pool becomes a very interesting play because it's similar to Lido in the respect that it's a staking play on Ethereum, but it's a little bit different because Lido's liquid staking and Rocket Pool's validator staking. And if we look at Lido's market cap, it's got a fully diluted of 1.6 billion. Rocket Pool has a lesser fully diluted of 476. So I think that if you're in this Ethereum long-term staking play, having exposure to Rocket Pool 100% makes sense next to Lido Finance because I like both of these protocols. But in fact, I could almost make the argument Rocket Pool has better risk reward than Lido Finance. Because if we look at this graph, by the way, great thread from Evan Jones. I would get into all of it, but it's very technical. He basically values RPL based on the mechanism that drives demand for the RPL token. So essentially, to make Rocket Pool permissionless, just so you understand how they accrue value, node operators, so if you decide to operate a Rocket Pool node, you're required to supply a bond of 10% of the Ether you borrow to spin up nodes by purchasing RPL and staking it. This is how Rocket Pool accrues value. So if you want to start a node, you need to purchase RPL and stake it. So the more people that want to stake Ethereum through Rocket Pool, the more people need to buy the token. The more people that need to buy the token, simple supply and demand, the more the token goes up. That's how it accrues value, because you're forced to buy Rocket Pool and stake it, or essentially, buy it to bond 10% of your Ether in order to A, make the protocol permissionless, but B, drive demand for the token. And this is essentially what increases the demand for the token over time on the assumption that the Ethereum staking yields decide to increase. So he does a whole mathematical calculation of the Rocket Pool price target based on the Ethereum ratio. He says that if you take into yesterday's value for the new metric, RPL's fundamental demand, then he thinks, based on how much ETH will be minted in the near future, that it will sit a 7.5x above the current ratio of ETH to Rocket Pool. So if you look at the graph here, he believes that we're here on the current, it's a graph of what the price of RPL should do as the current ETH supply increases. So he believes that we're still very early in the supply growth of RPL. Now, obviously, this is a bit of napkin mathematics, because it's making assumptions based on future growth. But at the same time, if Rocket Pool could just capture a small percentage of this Ethereum staking market, then it's very clear there's a distinct correlation between the amount of RPL being staked and the RPL price. So very interesting thread. I recommend going through and reading it in your own time, because it kind of outlines his thesis for RPL here. So at the end of the day, I mean, Rocket Pool, in a similar fashion to Lido Finance, it had that massive run up. Then it went to $60. It had that massive drawdown to $10. Then pre-merge, it ran up again to $38, and now it's back to $25. This is another one that I'm looking at buying. So these are the two liquid staking platforms that I think capture ETH exposure long term. So let me just frame this in a more actionable way, because Miles, buddy, you're making me dizzy. I'm sorry. It's because I'm still on my like makeshift setup in my country place, and I don't have like a proper chair, so my back gets sore sitting here. So sorry about that. But yeah, I'll just get into kind of what I think is actionable from all this information. So you guys know now, as Ethereum over time, the demand for staking increases, as the network size increases, as more participants come into the market and people need to earn yield, there are going to be major beneficiaries. So Lido is one of those beneficiaries. I believe another good way to diversify this narrative is through a project like Rocket Pool. I believe both are very solid projects. But based on what I've seen recently, there are some good things happening behind the scenes, with the staked ETH ratio getting back to parity on Lido. That is a very positive sign. The rewards at almost 6%, very positive sign. Rocket Pool's growth of 31% in market share, that's a positive sign for Rocket Pool. So overall, the health of this market is quite strong. And that's one of the reasons why I'm looking at accumulating Rocket Pool and Lido Finance. Now, if we did get a massive rally, obviously you want to be diligent with profit taking here. This isn't something I just ape into in a short-term trade and then try and make some short-term cash, because we don't have a very clear time horizon on when this could play out. It could play out within a month, 2 months, 3 months, 6 months, a year. And then obviously there's the long-term play as well. But there will come a point when we get that major relief rally, yeah, you do want to offload some of your bags. So if you buy a Rocket Pool at 25 and it 3x's to 75, then yeah, you do want to take some profits on that and then buy back and accumulate later. So I'm not necessarily saying buy it now and hold it forever. There's certainly going to be periods where you want to take profits. Yesterday, I did my buying guide. So my guide for when to actually buy tokens in the market. And one of my rules in that was, if you're unsure about a token and you really don't know if you should buy it or not, and you're bullish on it, but you don't know what to do, then I have a rule that I'm happy to allocate 30% during a retail phase, which is an expansionary phase of price action. And I'm happy to allocate the other 70% to an accumulation phase. Now, although Rocket Pool and Lido don't really fit the bill of the type of token I was speaking about in yesterday's video, I do think that they are certainly in a cooling down phase. And I wouldn't necessarily call it an offloading stage. I'd call it probably if we look at a small time frame, I'd say we're in speculation for Lido, but that is a subjective opinion. That isn't an objective opinion, of course, whenever you're coming up with these pseudo market phase rankings and stuff. So I would say if you watch yesterday's video, maybe we're entering a speculation phase because people are speculating on staking increasing. We haven't really seen retail mania since the merge. So that would be one of those triggers for that 30% allocation. But once again, your financial decisions are your financial decisions. You have to accumulate based on a variety of factors: your time horizon, your risk tolerance, the amount of available capital, etc., your cash flow. So all of these things come into account. All I could tell you is that I'm not fading the staking narrative. I'm looking strongly at Lido and Rocket Pool, and they are tokens I'm aiming to accumulate. And I've explained the logic why, and it's probably something I'll also touch on in the future. Now, if Bitcoin staking is something that interests you, because obviously we don't just hold Ethereum, a lot of us also hold Bitcoin. DeFi Chain, which is also one of the show sponsors, thank you to DeFi Chain, they have a way for you to essentially use Bitcoin in DeFi. So if you go to their website, there's a link in the description, defichain.com. You can download their phone app or their computer app, and you can stake your Bitcoin or provide your Bitcoin as liquidity to earn yield on your Bitcoin. And this isn't like a CeFi Ponzi Voyager Nexo type play where you lend them your Bitcoin and they go and invest it. No, this is DeFi. This is decentralized. You're staking in liquidity pools, so your only risk is impermanent loss, but there are direct staking pools that you can look at. And there's also things that you can do. So if you want to swap your Bitcoin, you can swap it on the DEX instead of using a centralized exchange, etc. So pretty cool. You can stake in the nodes as well. I recommend checking out DeFi Chain, link in the description, because it's a pretty cool product. If you're holding Bitcoin just in a wallet, then this gives you an option to get involved and stake some of it. Now, obviously, you might not want to stake all of your Bitcoin. You might want to keep some in cold storage, but staking a little bit can be a good way to earn passive income. So yeah, thank you to DeFi Chain as well. So I thought Rocket Pool was hacked. No, it wasn't a hack. There's been like minor exploits, but not like huge hacks. Just looking through if there's any more questions before I head off. What about ADA? I don't know. I just prefer NIA. I mean, we can get into that conversation at a later date. I just think ADA's very religion based. NIA doesn't have that religion, but if we look at the tech and the relative market caps, NIA to me has more attractive upside. El Capo has me holding off. This is one thing you have to understand about Twitter traders. No one knows what's happening. El Capo doesn't have any more of a clue what's going to happen to Bitcoin in the next month than any other guy. I'm just as qualified to make an opinion as him, just because he's a trader. You're just as qualified to make an opinion as him. It's all guessing, and as far as I'm concerned, the TA he uses is fairly basic. So there's nothing super magical about it. It's just his intuition. And yeah, some people's intuitions are better than others. He had good intuition about the decline in price. I give him props for that. But we can't just listen to one guy and his opinion, because that's just such an isolated way of thinking about the market. And I certainly don't think he's any more qualified than anyone else to have an opinion on where Bitcoin is going. That's why we kind of like investing with that slightly extended time horizon, because it takes the pressure off that long-term stuff. And also, just trading shit coins, trading small coins, gives me a bit of adrenaline in the short term, so I can afford to do that. Cool. All right, I'm going to see you guys in the Sunday show. So come hang out with us on Sunday. We're going to have a red wine. We're going to play some games, do some giveaways, do some live trading. We're going to do a live trading comp, maybe even get one of the community members or two up. That's going to be a lot of... Someone's asking me what intuition is. I do think risk reward definitely remains the upside. However, the earnings report certainly has things a little bit shaky. That's not really how I'm trading though, Martin. The thing is, I don't really need to pick bull or bear in this market, because what I'm doing is I'm identifying small caps and I'm making money off them, and I'm identifying narratives that can perform bull or bear. So for example, I position myself in GNS quite early. GNS is now up over 100, 200%. Even if Bitcoin is 15K, GNS will perform well with an Arbitrum launch, and it probably will perform well in the hype. I may sell some because, buy the rumor, sell the news, but I don't really need to rely on the market for that. MVX yesterday, made almost 40% on that. I don't need to rely on the market for that. Airdrops. I'm doing a lot of airdrop strategies. You guys know if you're following my Twitter. I don't need to rely on the market for that. Yeah, sure, these long-term holds, you are relying a little bit on the market. So, of course, you do want to have that intuition, but it's not really affecting my trading right now. And I'm not really that concerned. If Bitcoin wants to stay at 19, it could stay at 19. There's still altcoins popping left, right, and center. There's still opportunities popping left, right, and center. In today's video, I believe Lido and Rocket Pool are some of those opportunities. Maybe they don't explode tomorrow, but at some point, I definitely think they have a good chance of running. So, yeah, that bull or bear intuition, bias remains to the upside, but it doesn't really matter when my bias lies because you can still make money. And that's, I guess, my overall message. Yeah, I'll see you guys on Sunday. All right, I'll see you in the next one. Peace out. I'll catch you guys on Sunday.